morning and good afternoon. Welcome to our March Madness broker webinar. All right, well, let's go ahead and get started. Good morning, everybody. Good afternoon. Thank you so much for taking time out of your busy schedule to join us with today's webinar, Opportunities with Investment Properties. Once again, I will read our disclaimer. The content of this presentation is proprietary and confidential information of Home Express Mortgage Corp. It is not intended to be distributed to third parties not participating in this webinar without the written consent of Home Express Mortgage Corp. And we thank you in advance for your support of that. Let's look at our agenda. Lots of good stuff happening here, David, today. A lot of information. This is going to be great, exciting, looking at business purpose, non-owner occupied consumer purpose, and some DSCR business highlights. So we're going to get through all of this today. Again, let's take a look at our presenters. We have David Greider, who's our SVP of Wholesale Lending. Again, my name is Andrea Formato, and I am the Sales Training Manager here at Home Express. We're super excited to have you here today. David, before we get into it, I have a poll. You know, I'm super excited about these polls, and I wanted to kind of get a feel out there.
Awesome.
We're going to do a little bit of a little icebreaker before we get into the business piece of it. Can you see my screen okay? Can you see the poll?
Oh yeah.
Okay, here we go.
Madness. Wow.
March Madness. Now let's keep it friendly, everybody. Let's keep it friendly. Who do we think is going to win it this year? Greider, do you have any predictions?
I'd like to see UCLA win, mainly because I'm in the West Coast, right? But Gonzaga would be good. They keep knocking out the door. You know, they got a good team. Man, I don't know. It goes to guard play and defense. And when you go to the tournament, the ones with the guards that can shoot and play usually come out on top. But they're always surprises. There's going to be a 12, beat a 4 or 5, and that kind of stuff. So I'd probably pick not my favorite team. My favorite team didn't make it, but probably stick to a West Coast team, Gonzaga or UCLA would be me.
There you go. Look at that. Well, it's pretty close here for Zags and for my favorite team. So good luck, everybody. Thanks for participating. And I guess in April we'll come back, David, and we'll take a look to see.
Yeah, no, it's gonna be fun.
Let's see here. Here's the results. Yeah, so Zags and your favorite team. All right, awesome, everybody. Thank you so much, and good luck in the March Madness. All right, David, let's go ahead, and I'm going to turn it over to you to kind of jump right into it, talking about the purchase market for 2023.
Excellent. Thank you, Andrea. Again, last month's webinar was specifically more geared towards the purchase market. And I kind of want to start here because we talked a little bit more on the consumer purpose and that volume going up. Just want to kind of refresh what we're talking about. 2023 volume compared to 22 of volume. And you can see where Q2, we're going to see a lot more activity we saw in Q1 and a lot more than Q4 of last year. And so I think it's important to know that we're hitting the purchase money season, and that purchases are great. You know, those loans, I've seen activity go up even with our company. Applications are up. Again, there's a lot of people that have been put on the sidelines over the last few years with the rates being so low and people buying homes sight unseen, paying cash, all kinds of different stuff. Made the market kind of turned a little bit, even though the purchase money there, you're probably going to have a little bit more of the FHA going on with the home values, because the higher home values seem to be ticking down the most in values right here. And also we've seen a big uptick in investment purchases, right? A lot of them are looking for opportunities to increase their investment non-owner portfolio to see through this. And they do that a couple of different reasons. One is the actual purchase itself, maybe some cash out on some other investment properties they have, to have that looking for deals in certain areas to expand their non-owner occupied investment property. So just kind of get a glimpse on that. And then we'll go to the next slide and talk about some other opportunities that I've seen, because I really thought we'd stake towards 70% purchases, 30% refinance throughout this year. But I've seen a lot more refinances come in, more than I anticipated. And I just jumped on one of the articles I've seen through here, but there's been a lot. This from Reuters was that the U.S. household debt is at a record level. And we're seeing that with auto debt, credit card or consumer debt, and along with the mortgage debt, probably all go in there. But you can see where that goes in. We're going to have to do something with this with inflation. So I think cash out is going to be a good tool to use, and we've kind of seen that with the HELOC market coming in, because when you look at a primary residence, when they jumped on some of the low rates at 3%, let's say, and to refinance now, I thought the conforming rates went up like 7, right, this week. Probably would rather have the $100,000-$200,000 HELOC. It's more of a blended. But what if they have an investment property that they want to pull cash out? Maybe that limits or the HELOCs that maybe not be available as they are on a primary. And plus that rate might be 6, 7 on that investment property, might be better off looking at the cash out on their investment property. So there's lots of opportunities on the purchases and the cash out. So with that, I think I'll go to the next slide, or I think might have another
So
poll.
yes, we do. Before we go to the next slide, we do have another poll, and this one is not about March Madness. So let's go back. This is, we wanted to get a feel for the landscape here for all the participants on the call. Have you ever done a DSCR loan before? This is something that maybe a couple of years ago, the majority of the landscape wasn't necessarily aware of. And I think, David, we're seeing it kind of creep up more and more. So we just kind of wanted to
Absolutely. This
put it
hasn't
out
been
there.
around, I first got back in IQM, I think it was like 8 years ago, right? So back into this, I call it really non-agency business, but this product hasn't been around 8 years, but it has been pretty strong the last 4 years, right? And so I think more people are more familiar with it. So I think this would be mostly on the yes side in the last couple, 2, 3 years. So
Well, guess what? You are correct.
ah, great, right? Well, I'm glad there's some no's out there too, so that we can kind of go over it at a high level. And as we go through these slides, and I'll talk more than just because you can read the slide. Please put questions in the chat if you see something you have a question on. We'll answer all those at the end. So I want this time to be like, I try to keep these to 15 minutes and have question and answers at the end on something you may have, right? So the first we're going to look at on investment properties is called business purpose, right? And this goes for purchases or refinance, and those are primarily done through DSCR, even though you can do an income based as well. What DSCR stands for is debt service coverage ratio. So we base the loan criteria off the credit profile of the borrower, right? And the cash flow of the property. Everybody probably heard the term cap rates and all this stuff when you do the commercial type of lending. It's kind of just a down version of that. So you're looking at, hey, the gross rents of this property divided by the total housing payment on that. That gets you your coverage ratio. And those individuals with their credit profile pay the mortgage on housing on time. They have their credit profile. That's it. Very limited documentation on that. So it's not a DTI loan, right? But we also seen a lot over the last 60 days go the income route, right? Whether it's full doc, 1 year full doc, bank statements on the self-employed, those have come in because a little bit better on the rate. And if the DSCR is below 1, even though we go down to 0.75, you don't have that add since it's qualifying just on income, right? And so when you talk to, prospective, clients of yours, there's a question asked. Maybe they have the income. Maybe we need to look at a DSCR, right, of where they're at. Because someone has very complicated tax returns or those type of activities, it could be just easier just to get it done through DSCR. Next, I want to look at the property types that qualify on this. Again, the SFR condo PUD, 2 to 4 units, and we have a 5 to 8 units. And recently we brought in short-term rentals, STR, right? So we can do DSCR for business purpose, right? Transactions on all these types. I'll go a little bit more in depth on short-term rentals on some other sides, but I always put on here options are not fit. This is what non-QM is it's really manual underwriting of agency loans that don't quite fit the box. They're really good borrowers, great LTVs, great assets. They just don't fit the box of agency. So we'll go to the next slide and go a little bit deeper on this for those, right? So kind of where we went over DSCR, right? The DSCR, we talked about debt service cover ratio and how it qualifies. Purchases, right? Purchases on these, we just use the market rents on a purchase, and that'd be your 1007 or 1025 if it's units. I think it's a 1050 if you're 5 to 8 units. A little bit more complicated when you get to 5 to 8 units, right? So talk to your AE on the 5 to 8 units before appraisal's ordered. Make sure got that dialed in. Refinance, we can use either or, right? So we can go on refinance, we can use the 1007 or 1025 or actual rents, right? So you can grab the lease agreement plus 2-3 months of proof of receipt. We can use that if the 100725 is lower. But keep in mind on a refinance, if it's a cash out and you're doing business purpose, cash out must be used for business purpose, right? That kind of segregates, the TRID laws, right? So if the cash out's being used to purchase another investment property, fine, for their business or to improve their investment properties, that's great. That's business purpose. But they're using cash out for paying off debt, right? Or for college tuition, that is would be a TRID loan, and that'd be go to our non-owner occupied TRID type of loan, right? Which we'll go for a little more. Property types, we already talked about that. 1 to 4 units, 5 to 8, and STR. That's short for short-term rentals. The calculations, right? This is one where I'm trying to separate kind of an STR, right? So we use a 1-to-1 on a DSCR for using long-term rents, right? So which is good. There's no expense or vacancy on the DSCR, which helps qualify more borrowers. If we're going the short-term rental route, we use a 20% expense vacancy factor on that. So I'm going to, kind of explain a little bit about short-term rentals. It's been out for a little while. There's been some using this, but as we saw through COVID, and I kind of use this explanation, right? A lot of people didn't want to be in hotels, right? Because there are lots of people, they're closed down, and they'd rather take their jug of bleach to the home, wipe it all down for their family where it's more enclosed. And that has expanded a lot over the last 2 to 3 years. Now, are the rents for a short-term rental going to keep up with that trend? That's the unknown. So there's a lot of unknowns on that, but we do know this is in certain areas going to be used, and it's going to be long-term, right? I give the example of like Lake Tahoe, Palm Springs, Orlando, Florida. We all know they have a greater propensity geographically to have more short-term rents there. The cash flow is great, and individuals are buying those properties for that purpose, right? But we don't know exactly how it's going to turn out. That's why we're using a 20% expense vacancy factor on those. So we'll go to the next slide and kind of go through this, right? DSCR, there's just some basic qualifications on there. You can qualify off the interest-only payment, and that's at a 1-to-1. So a lot will qualify. And with that, I got another slide on that, but we go down to a 0.75, right? To have an 80 LTV on a purchase, you need to be 1-to-1 or greater, but underneath that, you can still get a 0.75 LTV under 1. On the STR, all right, so I'm just going to go for some of the qualifications. So a lot of it, can be long-term rents. Maybe long-term rents is a better for you, even though it might be used for short-term rentals. And that's where we have highly trained account executives here at Home Express can go over that transaction, give you the best way to structure that loan. But if you're in areas where it's a higher density of short-term rentals, that might be the best way to go, right? So if it's a purchase, it must be in a higher density STR. Refinance, we can use the last 12-month average. Remember, with short-term rentals, they're more seasonal, right? You get higher rents in summer months if you're by the beaches, or in the winter months, or higher rents if you're in kind of the snow country, right? Skiing type of resorts, right? But you need a 12-month average to kind of divide, add up for the last 12 months, divide by 12. Here's the average. And then we take a 20% expense factor off that, right? We can use the printouts from Airbnb, Vrbo, et cetera, or the bank statements where they're depositing it, right? So it kind of goes with that calculation there. Again, you don't have to be an expert of all the calculations, because this webinar will go on for an hour, right? I'm just trying to give you a high overview of it and let you know who to contact. You should contact one of your good account executives that can explain how these options work to pick out for you and your client on submitting that, getting that deal closed for you. Now I'm going to look about consumer purpose non-owner occupied, right? So I think this is going to be one area where a lot can fit in certain areas where, hey, they don't want to refinance their primary, but they have, a couple investment properties that they acquire with great amount of equity in it. Where do you go, right? Well, you can come to Home Express. So we offer consumer purpose non-owner occupied transaction. Again, this is a TRID loan since the purpose of the cash out is for consumer purpose, and that's kind of defines it through Dodd-Frank of what is a TRID loan, non-TRID loan. So the option we have is on this is as far as the income, full doc, we got 1 year full doc, W-2s only plus a lease agreement, or for a self-employed, we can do bank statements. So a lot of that will qualify in there, and it kind of opens it up. So just remember what the purpose is of a loan, where you go, business purpose or consumer purpose. We have both covered for you, right? But with that, when you're doing a DTI loan, right, we do have a 20% expense factor applied to that transaction. So I just gave you an example right here, gross rental income 2,500, total housing of 1,700. So you take 20% off the gross rents, that's 2,000, subtract, you have a net positive income of $300, right? So that goes to the income section. If that was a negative, it would be a liability like a debt. So that's the two kind of transaction, the difference between business purpose and consumer purpose, right? So DSCR, some of the business purpose highlights, and I'll tell you, there is a lot because there's very few overlays on it, right? So borrower can own unlimited number of properties. We do up to 10 loans to the same borrower at one time. Maybe they're looking at doing different things or cashed out on 3 or 4 at one time to buy that 4 unit or whatever their goals are. And these are non-TRID, they close fast. We put down here like a slim down LE. There's really no LE. We send out the terms of it just so it's aware. Nothing needs to be signed. But there's no like timing rule. I intend to proceed. We allow dual comp, right? Cash out though, I always put on it must be used for business purpose. Minimum FICO in there at 640. And you have the ability to vest in a business entity. And I see a lot of that where they want to keep it in the LLC. They set up for those properties to limit their personal liability, right? And lastly, this expands what you can do when you do business purpose. So there's a lot of states where we're licensed in where it's not required for you to have an NMLS license. So we have a map here to kind of show you all the states that it's not required to have an NMLS. And that's everything that's colored black on this. All those states do not require NMLS to do that. So you can be licensed in California and do a business purpose transaction in Texas. I see that quite a bit. Or Florida, right? So you might have clients that might have looking at buying properties in Florida, but they live in California and they bought some investment properties there. That's perfectly fine. You can do those transactions. We're trying to open up so you can close more loans, right? And make more money as we have a little bit of a downturn in mortgage applications from 2021 and early 2022. So this gives a bump. Now you're going to get a copy of this deck, so you don't need to memorize and write it all down, but we're going to send you out a copy of this. So that kind of goes into that. And I'm going to talk just a little about Home Express's recently expanded programs. We've opened it up down to a 640 score. Previous to that, we're at 660. We can go all the way to 80% LTV on purchases. I think that's with a little bit higher score. If your score is lower, it might be at 75, but that includes units. And we do have options for DSCR down to 0.75. On the consumer loans, right? FICO started at 620. We do have LTVs for primary up to 90. And I just put in options for ATR. I mean, that'd be a whole webinar for an hour or two on itself, right? When you talk about self-employed or even W-2, how to use assets to combine that to how it works for the DTI. There's so many options for an ATR. So if you're looking at a loan and you're short on DTI, we're going to have options for you to get that deal closed. And we brought in the cash out for consumer purpose, right? Again, those won't have a prepayment penalty because that's against the law and consumer purpose. We brought in the short-term rentals to help you close more loans. And since we're a true lender, that means we use our own guidelines, we fund with our own money. We can make exceptions with compensating factors. Other thing I put on there too is FHA and VA manual underwrites. We are FHA lender, have been for quite some time. And we're not here to take what you do internally. We want you to go to where you go from the standard traditional lending they have out there. But what do you do with those loans that might have a 540 score on FHA, 580, right? We have those options for you at Home Express, right? We're experts in manual underwriting. We can take those loans just like we do with our non-QM. That's primarily like an agency fallout. It's a manual underwriting agency loan. We can do that as well with FHA. So make sure you're contacting, your AE that you go through that, all the options. So don't say no without on a loan or without talking to one of our highly trained and experienced AEs. So I'm going to take some questions at this time, kind of wrapping it up here about 15, 20 minutes into it.
Yeah, awesome. Thank you, David. We do have a couple questions. So one of them, I think, is maybe a clarifying question from something that we said earlier. They just want to make sure that we will go up to 80% LTV cash out on a DSCR if it's a 720 FICO and if it DSCR at 1 or greater.
That is correct. We can go up to 80% on cash out on DSCR on the higher FICOs.
Excellent. Thank you so much. And then another question came in regarding reserves. So they said, we see that you require 6 months reserves on DSCR. Is that 6 months just on the subject property or all the property?
That's a great question because that's a lot of reasons why non-owner occupied transactions go into, the non-QM space, right? If you look at some of the agencies, they require 6 months reserves on every single property they have a mortgage on, right? And we don't. It's only on the subject property, and that's at 65 and above LTV. If you're under 65, no reserves are required. So they even have programs for that. But above 65, we do require 6 months reserves. And the good news on a refinance, right? We can use the cash out for the reserve. So a lot more flexibility in the non-QM space regarding reserves.
Thanks, David. Here's a good one that came in. Why would anybody want to DSCR down to 0.75?
There's a lot of reasons. I guess the first one I would go with is because the 1007 or 1025 may not be accurate. Most appraisers use MLS and they go to that data. The data might be old. They might have some other influence. They're just not getting all the hits for it, right? And really a true investor who kind of knows their market well. You can tell by the history of it that, hey, it's not a first-time home buyer. They have a couple rentals. They kind of know what they're doing. So if it drops below 1, there probably is a reason why, right? Well, the one that comes to me is they're planning to maybe rent it out as a short-term rental, but it may not qualify that right now. So it's a little bit under 1 on the long-term rents, right? But you can just look at it, kind of know that investor is not going to put 20, 25% down on a property without some type of strategy on their own to do that, right? So there's lots of reasons why, and so there's just a few examples I gave you.
Awesome. Thanks, David. We have a couple kind of general questions and then kind of back to DSCR. So the first question is, do we use any fraud tools on our loans?
Yeah, every loan, this is what's different from the financial crisis. Every loan gets underwritten to standards. We do Pro Fraud Guard on all borrowers and transactions that we get. So we will know if there's something going. That's kind of usual one, but every loan we do has some type of reporting on that. And again, our loans end up in the bond market. So they do go through due diligence and through the rating agencies and those type of things. And that is a requirement in the secondary market.
Awesome. Thanks, David. Next one, does Home Express allow mixed use properties?
Man, that's a lot. That's a lot of questions. It depends on what the mix is,
Yes.
right? And if it's like a true, like, a true mixed use, if it's limited on the mixed use, like I'll give you an example, like let's go to San Francisco because I kind of know that market a little bit well. And it's a 3 unit. They have some type of little store down below. They got condo on top, another condo unit on top. They call them apartments there. You know, I think those would be acceptable. And you all see some condos with the first floor being Jumbo Juice or some coffee shop, and you have 2 or 3, 4, 5 stories of condos, right? That's acceptable. And so it really comes to the nature of the property. And again, as a true lender, we give every loan on its own merits, and I'd like to look at those and see if those can do that one for you. But it needs to be more limited on the mixed use.
Great, thank you. Here's one that I know marketing will enjoy this one. Will there be any DSCR or FHA marketing flyers sent out to our contacts?
God, they should be receiving them, right? So I'm hoping you are. And again, for those that put that in there, please, you'll see my contact, and I'll have marketing send you specifically some things, or give it to your account executive contact to provide some of those flyers for you.
Okay, excellent. So we have a scenario that came in the chat, David.
Okay.
So the scenario is that the Airbnb is just a few months old. So no tax returns or full year income. The main house is long-term rents. Guest house is short-term rents. Short-term rent is a garage conversion that is not permitted. Can we still do this
Wow.
as short-term DSCR?
Wow, that's got a lot of movement.
That's got a lot to unpack.
Now, again, we go to 0.75. So, I mean, the garage conversion, and again, this is how I look at properties, okay? And everybody goes, hey, it's got this going. Is it marketable? I mean, it kind of fits the market in general. And then is it legal? So if you're illegally using garage conversion for short-term rentals, that's a problem, right? If the garage conversion was done legally and it's an area that's zoned for short-term rentals, we could look at that. But just given where you're at, I mean, it's a legality issue of not being permitted in that, where that income may not be stable enough going forward, right? Somebody can drive by, got all this done, and then got the county out there saying, hey, you can't do that stuff, right? So that's the problem on that one.
Great, thanks. Here's another one, David. Would we use current lease income or appraised lease income?
Great question. So this is, I'm assuming this is on long-term rents, right? So, one is the current lease. That's not necessarily evidence of it. I had a discussion with an account executive, like, hey, we're going to refinance this and it's been vacant. Here's the current lease, and the current lease is substantially above the market rents. I mean, I could see where that's problematic from a due diligence standpoint, because anybody can provide you a lease, right? Here's the lease, here's a copy, whether it's validated. And we need to validate leases with at least 2 to 3 months worth of verification of that, right? And that's kind of different from a departing residence. This is looking at the non-owner where the non-owner occupied property where it's at. So I'm gonna tell you that's kind of problematic. Can we consider it? I think we would look at that and say, does that support the marketability of it? Again, some of these appraisals come in with a 1007 or 1025. That doesn't seem appropriate, right? We kind of know. We have a retometer. If you've ever gone to our portal and used some of the technology we have a retometer calculation, put in the property address, bed, baths, and it's going to give you some range of what the long-term rents are in the area. Kind of gives you a kind of starting point. But to go kind of clarify that, it's like that's problematic just using just a lease without proof of it.
Great, thanks, David. Here's a one about broker licensing. So let's say the broker is licensed in Florida. They have a DSCR investment opportunity in California where they're not licensed. Can we do that loan here at Home Express?
No, you cannot. California requires you to have an MLS license for that state. So the states surrounding you, like, they're wide open, but some of those states do require an MLS license. And that's California is one of them.
Yep, thank you. Can we do rural properties for DSCR?
Great question. Now I went back to my properties, marketability and legal. Now, rural properties have a marketability because there's less population in there, and the time to get a new renter in there would be difficult. I won't say no because since we're a true lender, we it doesn't matter what the appraisal has on it. They could say it's rural, and I'm looking at go, no, this is more suburban to me, and our credit department can make the decision without even changing the appraisal. Say, hey, it's suburban. So when I look at real rural or remote, those are off. But don't just think and say, hey, just because appraiser marks a rule that it's we would consider a credit risk being rural, right? I get this all the time on suburbs, right? Maybe it's got a couple acres, but it's really close to hospitals, Walmarts, Costco's. You're going to do that. We all know that that's going to be more populated. We're probably okay with that. So what I'd have you do is run that property up through your account executive, and we can take a look at it from our kind of a credit perspective, not from the appraiser perspective. Remember, there's only 3 boxes that appraiser can check, right? That's rural, urban, or suburban, right? There's not like rural with suburban features or suburban with some rural features. And we can make that call at Home Express.
Great, thanks, David. Next question, would they be able to use a seasoned business line of credit for funds?
For the funds down, the funds to close? Yeah, we can use that, right? A season, they have a line of credit, they have it open for funds to close. Yeah, we could take a look at that all day.
Great. Here's another scenario. Can you purchase a home that is currently owner occupied with plans to turn it into short-term rental and use the projected short-term rental income? That short-term rental income might be 3 times long-term rents 1007 income, which is needed to qualify DSCR.
Got it. So on a purchase, okay, and I'm looking at this, you're purchasing a property for a short-term rental. Doesn't matter, you could have a primary or person in there. I think that's the transaction type. They have their primary, they're looking around, they're going, hey, I want to buy this property, and my primary usage of this property is going to be for short-term rentals for business purpose. So this would be more of a DSCR calculation. Yes. Now, again, this property that we're going to lend to on a short-term rental must be geographically in an area with a higher propensity of short-term rentals in the area. We have that formula, and the appraiser can mark on there. You put them on there. I'm going to use for short-term rentals, and they'll put on the short-term rentals the amount that's predicted, because that data is out there now, and we can use that's on the 1007 for that property. But again, when you do the short-term rental, whatever's on there, you're going to have a 20% expense vacancy factor applied to it. So it's not a 1-to-1, but yes, that is a transaction we would love to look at for you.
Okay, great, David. Thank you. This is going back to that other question about the appraised leased income. So if they're saying, if it was as a follow-up, if that appraised leased income was higher, would we go with that?
We would go with the market rents on the 1007 if you're just got a lease agreement with no proof. So we're going to go by what's on the market rents on that appraisal.
Okay, great. Thank you. And then this is kind of a general question, I think, about the thought process behind the DSCR loan. Is the DSCR loan mostly just used to avoid the 20% expense vacancy factor, aside from the benefits of the low FICO and the fact that you can do up to 10 loans at a time with a 4 million aggregate?
That's an interesting question. It's, we just came out with short-term rentals over the past. We've been working on it for many months, but we just looked at it from a perspective that if it's in a market for short-term rentals, right, and there's cleaning fees and all that, and it's kind of newer out there putting in mortgage guidelines on it, right, that it should be a 20% expense factor, because we don't really know the long term or the fad of it's going to continue, right? No one's really kind of placing it. Again, when I look at loans just like that, it's like, what are they trying to accomplish? What is the proceeds, or what are they pushing, what are they attempting to do? And I go down that road. And you can always rent it out for long-term rents, and that's kind of your follow-up, is like your backup. What is the long-term rents on it? But it's not used for one way or the other. It's more, what's the purpose, right? and you kind of go down that route. What's the purpose? So they're going to buy it for a short-term rental. Let's take a look at that way. And then you can also look at long-term rents. It's not, it's because that's more the standard, right? Of investment properties historically.
Awesome. Thank you, David. That's it. I mean, that was a
Great
good one.
questions, man. I love it, man. This is why I try to keep it 10, 15 minutes of content so we can answer a lot of the great questions out there. And again, as Andre kind of wraps up, you can have my contact information. You can email me directly or give me a call.
Okay, great. Thank you, David. So I will just wrap it up here, guys, and I'll let you be on with your day. So our next month's webinar will be on Thursday, April 13th at 10 a.m. Pacific time. So we will be sending out information as we always do as we get closer to that date. So please stay tuned for that. As always, feel free to reach out to us if you need more information. If you are not currently an approved broker, if you want to submit a loan scenario, please visit our Home Express website at www.homexmortgage.com. We'd be happy to hear from you. And as David promised, here is his direct line, his email, his cell phone number. So you're on mute right now, David, but I know what you're saying. You want them to call you.
Yeah, blow up my phone, right? Is that, or give me a whole bunch of emails on scenarios. We'd love to do that. Again, we actually even have a loan committee that it can maybe just out of the box across, just like, hey, I don't know. But if you really feel strongly this is a good loan, send it to us. We'll take a look at that for you and we'll give you an answer of what we can do, counter it, what we need to get the deal done. So again, don't say no. Contact your account executive or myself direct. Let's take a look at your transactions and close more loans this year.
Awesome. Thank you. Thanks, David. Thanks again, everybody, for joining us. We really appreciate your time. And as David mentioned, we will be sending out a copy of this recording as well as the deck in the next couple of days. So be on the lookout for that. But thank you, everybody. Have a great rest of your day. Have a great March month, and we'll see you next month. Thanks, everyone. Bye-bye.